I'm Emily Chang, and this is Bloomberg Technology. Coming up, federal investigators confirm at least one criminal probe into Uber. We'll talk about what it means for the world's most valuable startup. Plus, Bitcoin CME debut, the world's largest futures exchange, will begin allowing bets on the cryptocurrency starting Sunday. Why the weekend launch could be a virtual currency game changer. Plus, another first for SpaceX. Elon Musk's other company sends a recycled rocket and a recycled payload blasting into outer space. Why going green could be the future for space travel. But first, to our lead. Uber is under at least one criminal investigation. Today, we are waiting for a letter alleging Uber's market analytics unit existed to acquire trade secrets and spy on the competition, waiting for that letter to be unveiled. It's from an attorney representing Richard Jacobs, a former Uber security analyst, detailing some of Uber's business operations. This may be a key piece of evidence in the Waymo versus Uber case. The letter was supposed to be unsealed at noon local time. It hasn't happened yet, but it could happen at any moment. Joining us now here in the studio, Bloomberg's Joel Rosenblatt, who has been at the court covering this case all day long, along with Bloomberg Tech's Olivia Zaleski, who covers Uber, and our guest host for the Hour, Techonomy CEO and our Bloomberg contributor, David Kirkpatrick. David, thank you for joining us. Joel, I want to start with you. What do we believe is in this letter, and why is it so important?
We already know a lot about the letter because Jacobs testified in court, and a lot of the letter was read into the courtroom testimony. We know that it alleges that Uber engaged in all kinds of things. It makes a wide array of allegations, some of which he walked back. So we should be careful with that. But we know at the very least that, for example, it alleges surveillance on competitors, on other riders, for example, and we know that it's also that Uber engaged in some web scraping of competitors, so peeling information from foreign competitors about foreign competitors off the web.
So what has he walked back?
He has walked back very significantly the trade secrets claim. So he alleges that there was a group within Uber designed and built to steal trade secrets. This, of course, is what Waymo is most concerned about because it comes from the lawsuit in which Waymo is alleging that Uber stole their trade secrets. And pressed in court, Jacobs walked that back and said, you know what, I don't really know for sure. I don't have firsthand knowledge that trade secrets were stolen by this group. And it's just kind of ironic because that may prove actually useless, this letter to Waymo, but it exposes all these kinds of problems, some of which are true.
And how does this play into the now criminal investigation?
Well, so this comes from
there are a lot of investigations.
Yeah, I think Bloomberg has reported as many as 5. Mm-hmm. This comes from a criminal investigation. One of the criminal investigations that we know of is of possible trade secret theft from Waymo. However, we don't know that this letter is actually related to that particular criminal investigation. We don't know that.
Too many investigations to get.
Yeah, I think another important point to consider is there are about 1,000 people working on security at Uber. And so the idea that one person would have access to all of these different projects and would know about them with firsthand knowledge is also coming into question as we start to learn more about Jacobs. This idea that he would know about market analytics, but then he would also perhaps know about surveillance efforts based on governments is questionable. And so there's a lot of back and forth on how much he knew, how much would he have had firsthand knowledge of, as opposed to just overhearing things in the office and maybe taking them out of context.
Now, David, Uber 2.0, new Uber, that is, has said over and over again, we have new leadership, we are changing the way we do things, we are going to be more transparent. But how much do these old skeletons in the closet, if you will, hurt, the Uber of today?
Well, clearly the Waymo lawsuit continues to hurt the Uber of today. But I think if there's multiple lawsuits, probably more than we even know about, there is a macro question that's pretty hard to answer, which is how much will the old culture, even if it's now, dispensed with, going to hurt the future Uber? And my guess is it will hurt the future Uber considerably, despite the fact that its current leadership seems to be far more responsible in the way they're running the company.
So, Joel, how much will this letter hurt Uber versus help Waymo?
I think it hurts Uber a lot more than it helps Waymo for the reasons that David was talking about. It's like, so you can see Uber trying to clean house, right, and to clean up these lawsuits and the litigation, but it's like every time there's another skeleton in the closet that reveals this whole new raft of problems. In this particular instance, I think it's important to point out that the competitors that the letter alleges surveillance of are foreign competitors. We're not talking about Lyft here. So we'll see how much of it pans out to be true, but so we're talking about Uber trying to get into foreign markets, right? Especially their problems in London, for example. You know, just as they're trying to make inroads in foreign markets, and really, you know, they're desperate to do that. Those countries are going to learn about these practices of their companies based in those countries. It's a problem.
Their integrity, again, coming into question.
Right.
Olivia, I know you've been on the phone with sources all day long. You know, how are people feeling about this within the company? How disruptive has this been, along with everything else that Uber has been dealing with?
Yeah, I mean, I think people that are close to Uber, they feel devastated by this because they feel like their job was to protect employees, to do everything that they could to protect Uber from other companies that they say were spying on them, and that was their intention, and that this is being taken out of context. But, you know, violating a law is violating a law, whether or not you did it for benevolent reasons or to protect your own employees. So I think that they're going to have to deal with a lot of questions coming up, and it does sort of bubble up all these things that they have been doing behind the curtain, that they've been doing in secrecy, that may or may not have been illegal or may or may not have been ethical.
Now, David, obviously you've covered Silicon Valley and technology for many, many years. With Uber, I'm curious how Uber fits into the pantheon of Silicon Valley Shakespearean dramas. You know, every day there seems to be a new chapter that makes the whole tale even more dramatic. Does this cap them all, essentially? Well,
sadly, I think I would have to say that Uber appears to be just about the most unethical large company we've ever seen in Silicon Valley in its former incarnation. I think under Dara Khosrowshahi, it is clearly reforming, and I admire that. But the Uber that existed under Travis Kalanick was apparently a law-breaking organization, or certainly an unethical organization that took the risk of breaking the law very readily and did not abide by normal standards that we would consider what any company ought to abide by. And I think because of that, there are a lot of skeletons, as I said before, likely to continue coming out of this closet, which is tragic because it's a great company in terms of the service it provides.
Right. All right. Well, I know you all will keep us posted. Joel, you're going to be watching for that letter coming out any minute. Joel Rosenblatt, our legal reporter, Olivia Zaleski, who covers Uber. Thank you so much. David Kirkpatrick, my guest host for the hour. You are sticking with us. Well, Tencent has agreed to buy a 5% stake in China's Yonghui superstores. The stake cost about $639 million. The tie-up between tech behemoth Tencent and Yonghui follows Alibaba's $2.9 billion purchase of a stake in the Chinese grocery retailer Sun Art in November. Yonghui is China's fourth biggest hypermarket operator by market share and already has a tech industry investor in JD.com. Coming up, Bitcoin closes at a new record right before futures start trading on the CME. We will talk about the continued crypto craze next. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Bitcoin continues to be in the spotlight. Futures of the cryptocurrency made its debut on the CBOE this Monday, closing out the week at $17,630. And the world's largest futures exchange, the CME, is also launching its own competing Bitcoin futures product on Sunday. What should we expect as more exchanges feature Bitcoin? Joining us now here in the studio, GDAX General Manager Adam White, who was formerly the Vice President of Business Development at Coinbase. GDAX is the digital currency exchange run by Coinbase. And still with us, Techonomy CEO and my guest host for the hour, David Kirkpatrick. So, Adam, How do you see the week that was?
It's been an exciting week. We have our headquarters here is in San Francisco. We're not just a couple blocks away from you guys. We've had teams working 24/7. We think this is a really momentous kind of week and occasion for the space, and we're really focused on serving our customers and keeping our exchange up and stable.
So what are you expecting with the CME starting in a matter of days?
More and more institutional interest. So I think what's so exciting around watching the maturation of the space with things like crypto derivatives is it's really driving in a whole new level of customers for us. So we're moving beyond just the retail trader, the smaller crypto hedge funds. We are seeing now mainstream Wall Street firms like prop traders, hedge funds, market makers. They're entering the space and they're entering it very quickly.
So, David, has the institutional interest, the institutional action on Bitcoin over the last couple of weeks increased your belief in the legitimacy of Bitcoin and cryptocurrency in general and the future of it?
I would say certainly it makes me more confident there is some kind of future. I've never questioned the legitimacy of any of it, but why this particular asset should have this particular value strikes me as hard to answer. And I'd actually love to ask Adam, if I could, given that it seems to be sort of perceived, Bitcoin that is, as a store of value and as a speculative investment, and a sort of a new kind of commodity, is it, in your opinion, likely that that can remain the case even as Bitcoin still has relatively little utility outside of the tradable asset world?
Well, I think it's a great question. I would kind of push back and say I think we're seeing every day greater and greater utility in this new asset class. So there's a lot of focus on Bitcoin, but Bitcoin's just one example of the dozen, if not hundreds, of other digital currencies out there. And right now, most people are using Bitcoin as a store of value, absolutely. And there's a lot of speculative value that's baked inside of that as people look at, you can now use Bitcoin as a way to send value to anyone, anywhere in the world, just like sending an email. That to me is really incredible and very powerful, but you're absolutely right. We're in the early days, we're seeing a lot of developer interest, and we're seeing more and more use cases come out, but we're not quite there yet, but I think we're headed in the right direction.
All of this interest does impact Coinbase and Jita. I mean, at one point, you guys were the biggest cryptocurrency exchange out there. Right. Now you're the 7th. So, how does this hurt you versus help?
I think we have a long-term macro view on the space, right? Day in and day out, the market share numbers are going to change. What's important to us is that we're offering a safe and trusted platform to really attract the professional trader. For earlier this week, you kind of alluded to, we were the largest exchange in the world, and we did over $4 billion of trading volume in one 24-hour span. That's a huge accomplishment, but again, we're in the very early days. To us, we want to be trading in the tens of billions before we can really start to say we've made it.
So give us some numbers on the growth that you're seeing on your platform.
Yeah, so we talk a lot about the kind of trading volume, and we've seen that grow by orders of magnitude over the last year. We've also seen our user count increase by tens of thousands of customers, if not millions, on our retail platform. But we're also watching the activity, right? So the Bitcoin network itself, which is not a part of Coinbase, but the larger ecosystem, continues to see more daily throughput, more transactions. So not only is our company growing with the industry, but so is the actual technology itself.
And I'm curious for David's thoughts on this, but I'll ask you first. David Marcus, the head of Facebook Messenger, formerly head of PayPal, has joined your board. What does he bring?
He brings a lot of expertise and a lot of strategic vision. So just came out of a board meeting earlier today, of which David was a part of, and he's a fantastic resource for us to call on, ask for advice. He's been through companies of hyper growth and scaling, and he's really helping us kind of make sure we know what we're doing and headed in the right direction.
David, what do you make of the Marcus addition to Coinbase's board, and is it any sort of tacit acceptance by Facebook of Bitcoin?
Well, absolutely yes to the latter question would be my assumption. And not only is he someone who has experienced hypergrowth and done a great job building and creating companies in the past, but he is explicitly a digital transactions and digital currency kind of expert. And his original startup that took him into PayPal was a mobile money platform, a mobile payments platform. Then, of course, running PayPal gives him a lot of relevant background. I mean, the board of Coinbase is super impressive with the addition of Marcus to Fred Wilson and Chris Dixon, I have to say, and others. I mean, that's a great, great board. But could I just ask, who are buying Bitcoin? I still don't get it. I'm sorry. I don't want to let you go without knowing who are these people that are paying these prices, and are they just hoping that it'll go up, or are they really rational thinking, knowledgeable investors?
I really do think they're the latter. We're seeing growth from both sides of the table, right? We're seeing the institutions beginning to look at this as a new asset class. And the example of crypto derivatives, the kind of legitimacy that brings, and also the need to be able to trade on the spot markets, that's driving a lot of this growth. But we're also seeing the average retail individual say, wow, this looks like an incredible new technology. What's the easiest way to get started? By buying or selling maybe just $50 of digital currency. They're coming to us and they're doing that, and we're trying to make it very easy and safe for them to do so.
All right, Adam White, GDAX General Manager, thanks so much for stopping by. The long walk, the long couple of blocks it takes you to get here, really appreciate it. I know it's been a busy week. David Kirkpatrick, our Bloomberg contributing editor, you're sticking with us. Coming up, blasting off into outer space thanks to Jeff Bezos and Elon Musk, we look at what the billionaires are sending into the great beyond next. This is Bloomberg. Well, a lightsaber-wielding Jedi isn't the only Skywalker making headlines this week. Jeff Bezos' spaceflight exploration company Blue Origin sent a dummy into space last night named, what else but Mannequin Skywalker. The mission aboard its New Shepard rocket also contained several experiments and landed safely back on the launch pad. It will be reused for a future flight. And not to be outdone, Elon Musk's 17th SpaceX rocket launch had its own milestone. SpaceX sent a previously used rocket and a recycled cargo capsule on the same mission into the great beyond for the first time. The mission took place at Cape Canaveral Air Force Station in Florida. The payload, 5,000 pounds of research, crew supplies, and hardware for the International Space Station. The rocket landed back on the launch pad for future reuse. Max Chafkin of Bloomberg Businessweek joins us now from New York with more, along with David Kirkpatrick, our guest host for the hour. So, Max, why was this launch in particular so significant?
So, I mean, any launch, for SpaceX, any launch that goes well is significant, but this one is sort of a big deal because it proves out this basic idea that Elon Musk has been working on, for the last decade and a half, which is that rockets and spacecraft can be reused successfully. So what's interesting here is not only were they able to land this thing, but this was a used rocket and a used spaceship, which is now sort of making its way to the International Space Station. So it's the first time for that. So that suggests that, not only can they land these things, but they can use them again and again. And so, yeah, that's a big milestone in terms of trying to get the cost of launch down, which is a big part of SpaceX's business. It's a key to their profitability or hopeful profitability. I don't think we have that much information about their finances. And it also, as far as Elon Musk is concerned, is proof that we can eventually get to Mars or have manned space travel in the future.
Well, exactly. That was my next question. There's a very ambitious plan here, and this is just one step. What is the next thing that SpaceX needs to prove from a technology perspective? Yeah,
I think they need to show that they can do this over and over again. That's a big part of aerospace in general. The next big launch is this new rocket, the Falcon Heavy, which is a rocket that's big enough to, I think, theoretically take people to the moon, and then we also have additional tests of the current rocket that we saw with people in them. I think SpaceX has talked about doing that as early as next year. I think there was a report earlier this year that they were going to try to have a couple of space tourists go into space by the end of next year. Again, with rockets and stuff, I think deadlines are a little bit fungible because it's somewhat dependent on conditions and all that, and also Elon Musk obviously has a tendency to set ambitious timelines. So we'll see when those things actually happen, but that's what's coming down the pipe.
And David, I know that you're very impressed by these launches and this launch in particular. Right? Why?
Well, first of all, not only was it a used rocket and a used capsule, but the used rocket then landed back on Earth very successfully, so it could be reused yet again, which is just, to me, amazing. And perhaps Max knows the economics, but Clearly, this is going to radically reduce the price and the cost of spaceflight, which enables all kinds of things that we have never been able to do with space because it was simply too expensive to get up there. So to me, it's just yet another feather in the many-feathered cap of Elon Musk. And, to change the metaphor, the halo around this guy just continues to grow, and his companies do what seems to be impossible over and over again, and I continue to be amazed.
So, Max, last quick question on the economics. We don't know a lot about SpaceX's financials at this point. Their name is floated, as an upcoming IPO candidate, potentially even for 2018, when obviously we would learn more if such a thing happened. What's the likelihood of that?
Well, yeah, there were some rumors earlier in the year that SpaceX kind of quickly beat back. They've said there's nothing in the cards. Immediately. That said, I think the sort of general consensus is the economics on this company are pretty good. When you look at the market share of the launch businesses for the kind of launches that they're doing, it's pretty good. Unlike Tesla, which is really just getting its sort of economic engine into production now. I mean, SpaceX has had a pretty good business, and every time they have one of these launches that works, it's further evidence that they're making progress. So I mean, I think that, and I think the one barrier to them going public is probably Elon Musk, maybe not wanting to run a public company, wanting to put that off as long as possible.
For good reason. All right, Max Chafkin of Bloomberg Business Week, thank you as always for stopping by. David Kirkpatrick, our Bloomberg contributing editor, you are sticking with me. We're going to talk about the future of tech in 2018 coming up. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The AP reports a federal judge has ordered the Trump administration not to enforce rules that could limit female access to free birth control. The Health and Human Services policy would allow businesses to opt out of providing free contraception by objecting on religious or moral grounds. Secretary of State Rex Tillerson has backtracked from an earlier offer of unconditional talks with North Korea. Tillerson told the UN Security Council that North Korea must earn its way back to the table. He also demanded Russia and China cut off their lifeline to North Korea. Meantime, at the UN Security Council, Secretary General Antonio Guterres gave this blunt assessment on North Korea.
The situation on the Korean Peninsula is the most tense and dangerous peace and security issue in the world today. I'm deeply concerned by the risk of military confrontation, including as a result of unintended escalation or miscalculation.
French authorities have raised the death toll to 5 children from Thursday's horrific accident. A regional train slammed into a school bus in southern France at a crossing close to the Spanish border. 18 other children and the bus driver were injured. German Chancellor Angela Merkel and French President Emmanuel Macron held a joint news conference at the end of a 2-day EU summit in Brussels today. Merkel praised the bloc's commitment to combating illegal migration, but warned against selective solidarity among European member states.
We are not quite in agreement on inner solidarity, or not to the same extent as we are when it comes to external immigration. Here, we must continue our work, because it can't be that we have solidarity in Europe on certain matters and not on others.
Turkey's President Recep Erdogan says Muslim nations will ask the UN for an annulment of President Trump's decision to recognize Jerusalem as Israel's capital. Erdogan said today the initiative would start at the UN Security Council and, if vetoed, would work within the UN General Assembly. And Israeli police questioned Prime Minister Benjamin Netanyahu at his home in Jerusalem today. The Associated Press says Netanyahu is suspected of being involved in bribery, fraud, and breach of trust. The Prime Minister has already been interviewed 6 times regarding gifts he received from Hollywood and from business figures. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and we'll have more of Bloomberg Technology with Emily Chang straight ahead. Keep it here.
This is Bloomberg Technology. I'm Emily Chang. As the year winds down, industry watchers and analysts are starting to make their predictions for 2018. And several analysts from Goldman Sachs, Citigroup, and Morgan Stanley are warning that the large cap tech rally, which lifted the markets in 2017, will go flat in 2018. For more reaction, we are joined by our Bloomberg editor at large, Corey Johnson. Still with us, David Kirkpatrick, CEO of Techonomy. So, Corey, I'll start with you. Which is it? Go flat, increase, go down? What are we going to see?
You know, I used to get paid to decide what was going to happen to certain stocks in the market. I got paid more than I get paid now. I'm not going to do that. I think that there are some interesting drivers, though, that may govern what happens to these companies and their revenues. I mean, I can't predict that a company that blows free cash flow like a tire fire like Tesla is going to have a great reaction to the stock market. But I think when you look at the underlying fundamentals, there's some interesting developments that could come in the coming year. And I think that one of them we're going to hear about from Congress. Really, it's all the discussion right now, and that is the tax bill. I think the lowering of corporate tax rates, in as much as it leads to any R&D spending, it will certainly lead to buybacks and dividends and companies taking care of their shareholders and executives taking care of themselves. But when companies spend on themselves in R&D and in CapEx, they're going to do it in enterprise software and hardware. So I think the potential is there for companies like Cisco, companies like VMware, companies like Oracle to get a great benefit from all sorts of companies looking to spend money on IT and use enterprise technology to get to a better place.
So, David, Facebook, Amazon, Google led the rally this year. You know, next year, which one of those companies do you think is going to have the most interesting story?
Well, I think Facebook will have the most interesting story, but it's an extraordinarily complex story because I think the pressure on them to own up to some of their social impact is going to get greater and greater. That's going to be interesting. Meanwhile, I also expect the ads are going to continue pouring in and their money in revenue and profit is going to continue to do fine, and probably the stock as well. That there's a little question of whether the regulatory pushback that I see as inevitable against all three of the companies you mentioned could have a financial impact and an impact on Wall Street and the perception of investors. So far, we haven't really seen it, but I think it's inevitable. It's a matter of when. But I would just also add to what Corey said before. I would add Salesforce and Microsoft to the list of companies that could be beneficiaries of a turn towards sort of technologization across the economy as the tax bill gives companies more money to spend. Really, the entire economy is becoming a technology economy, and that should benefit investors in industry after industry, even beyond the ones we think of as tech.
And Emily, let's not forget, we've had a NASDAQ up 29% this year. If you bought stocks in the scariest time, you bought NASDAQ, just the NASDAQ index, just a flat-out index, this time in 2008, when the world was coming apart at the seams, with the depths of the financial crisis, this brand new Obama administration with this rookie president trying to figure out what to do to save the economy from itself, we've had a 337% return in NASDAQ in the tech-heavy, cliche out there, pardon me, cliche alert, but the tech-heavy NASDAQ, 336%. The notion that you could have more than tripled your money on that date in this short period of time is simply amazing.
Now, I do want to talk about net neutrality. We've been hitting this hard all week. Net neutrality repealed yesterday. You know, David, there was a strongly visceral reaction to this in the tech community, and yet you don't think it's as big a deal necessarily as, you know, some people do. Why not?
Well, first of all, I think it was the wrong decision. I think the rules should have been kept. But, you know, a very smart CEO of a tech company recently made the point to me that he was opposed to imposing the rules in the first place, and now he was opposed to removing them, and he was accused of hypocrisy. But his point, which I think is a very good one, is there really had never been serious infractions of network neutrality by the ISPs prior to 2015 when these rules were imposed. So having the Title II telecommunications regulations as a cudgel sort of held in reserve in case you needed to use it was a very good thing. But once you sort of put it in, even though you didn't really need it, it wouldn't be smart to remove it, because that sends a huge signal that, you know, sort of malfeasance or certainly, you know, abuse might be more readily accepted. So I do think we don't have the risks that a lot of the alarmists are talking about of near-term destruction of the internet. You know, it's really like the end of the world rhetoric you've been hearing the last day or so, which I find significantly overinflated.
All right, David Kirkpatrick, our guest host for the hour, and our editor-at-large, Corey Johnson. David, you're sticking with me. Corey, thank you. All right, a story we continue to watch. Samsung is said to be planning to debut its next flagship smartphone in February, presenting Apple's iPhone 10 with a sooner than expected challenger. The South Korea-based tech giant plans to introduce the Galaxy S9 and Galaxy S9 Plus as early as late February and release the devices as early as March. The new phones will be similar to current Galaxy models, but could include upgraded camera systems. The debut will be Samsung's first major phone introduction since the Note 8 was released in September. Coming up, what happens next after Disney's massive deal to buy 21st Century Fox assets, and what's the likelihood of antitrust hurdles? We'll hear from a major investor in Fox next. And this weekend on Bloomberg TV, we will bring you all our best interviews from the week, including Tyler and Cameron Winklevoss, co-founders of Bitcoin exchange Gemini, discussing the cryptocurrency as their net worth soars to $1 billion thanks to the dramatic rise in Bitcoin. Tune in this Saturday for the best of Bloomberg Tech. This is Bloomberg. The GOP tax bill could be about to clear its final hurdles. The revised version of the bill was revealed today, and in another bit of good fortune for the Republicans, two key holdouts, Senators Bob Corker and Marco Rubio, have said they will vote yes, all but ensuring the bill's passage. Anna Edgerton covers national politics for Bloomberg News. She joins us now from Washington. So, Anna, tell us what the highlights are here.
So there are a few things that we were looking at in this bill that reconciles the versions between the House passed version and the Senate passed version. There are a few things that mostly went the direction of the Senate bill, including the individual brackets for the income tax. So we have 7 brackets instead of the 4 that were in the House bill. Those rate cuts for individuals will also expire before the 10-year budget window. They will expire in 2025. And the corporate rate cut will be 21% instead of the 20% that was in the House and Senate bill. We were also looking at things like the child tax credit that Marco Rubio had said he wanted a more generous credit for working families, and he was able to plus that up a little bit. So there's a lot of compromises in here, but ultimately it looks like a bill that will be able to make it over the final hurdles in the House and the Senate.
So what are those final hurdles? Tell us what's next.
It looks like they're pretty much on their way politically. They have all the support they need in the Senate, it looks like, after Bob Corker and Marco Rubio decided today that they would get on board. In the House, it looks like they're in pretty good shape as well. The only thing we're looking for now, I think, is the test to pass the Senate budget rules. This bill is moving through a process called reconciliation that allows it to get around a filibuster in the Senate. So under those rules, there are certain restrictions on what the bill can look like, and there'll be one more scrub of this bill to make sure that it complies with all of those rules.
Now, when will we see the actual effects of this legislation, assuming it's passed?
Well, that's one of the big hurries that Republicans had to get this bill through the legislative process in really only about a month and a half. They wanted to make sure that this bill would be signed by President Trump this year and would be enacted on January 1st, 2018. And the political reason for that is that they wanted to make sure that the effects of this tax cut, any economic growth that would come from this, any benefits for individuals, would already be in place before the midterms in 2018.
So talk to me then about the significance of this, being, potentially a major policy victory, the first major policy victory for President Trump.
Yeah, you really can't downplay how important this is for Republicans and for the president. Their failure to repeal and replace Obamacare was a huge, almost humiliating moment, and it was one of their campaign promises that they were not able to deliver on. With these tax cuts, regardless of whether or not you think it's good economic policy, this is a great political win for them, and it's something that is going to give a lot of energy to their other legislative priorities, such as Speaker Ryan spoke yesterday of reforming entitlements in the new year, looking at ways to get people from welfare to work, looking at ways to shrink the social safety net so that more people are in the workforce and less people are relying on government handouts.
So how does this then position the clearly embattled administration going into next year, and what do you think will be the big policy things on the agenda in 2018?
Well, it puts a lot of much needed wind in the sails of the Republican Party. And it also gives them an example of how good it feels to work together. And you see that especially in the House of Representatives. The House of Representatives was a kind of disparate group of different factions where, different caucuses, like the Freedom Caucus on the far right, the Tuesday group, the more moderate members, they were able to kind of hold out for their own legislative priorities. But with this tax bill, they've all been able to get on board, realize how important this is for their political survival, and have found out that it feels good to work together. So they're going to try to pass more Republican-only legislation if they can. They're looking at their spending bills that they need to pass now before December 22nd. They're going to try to do that in the House with only Republican votes as well, and that's something that would have been unthinkable last spring before they had kind of the energy from this tax bill.
All right, Bloomberg's Anna Edgerton with us from Washington. Anna, thanks so much for that update. Coming up, an 18-person startup could beat Elon Musk to the electric-powered trucking competition. We'll introduce you to the company and the CEO next. This is Bloomberg. Facebook's value and impact on society has been hotly debated this week and for much of the year. Today, the company wrote a blog post saying Facebook itself has attempted to answer the question, is spending time on social media bad for us? This comes on the heels of comments from former Facebook executive Chamath Palihapitiya criticizing the social network. Friday, he took to Facebook to clarify his controversial remarks. Still with us, David Kirkpatrick, CEO of Techonomy, and Sarah Fire, Bloomberg Tech reporter who covers Facebook. So interesting, this post, Sarah, coming from a research director and research scientist at Facebook, talking about the psychologists that they have on staff, talking about some of the controversial research that Facebook or social media can be bad for us, but also countering it with some of their own that it can be good for us. Before we start, I want to read a quote from this post where they say, "We're working to make Facebook more about social interaction and less about spending time." And this is really the first time they're saying, look, we too are thinking about this.
Well, you can read the post and conclude that Facebook is caring about its users. You can also read the post and conclude that Facebook has come to a self-serving conclusion, which is that, maybe Facebook is bad for us if we use it passively, but if we use it actively, if we're commenting, if we're sharing, if we're organizing events, then it can be very good for us. And obviously that is what Facebook wants out of its product. The more you use it in a very active way, the more data they get out of you, the more engaged you are, the more the app is integrated into your daily life. So, you've seen the prompts at the top of your news feed. I got one the other day telling me that me and Selena Wang, one of my colleagues, we have 10 likes between us. It was a celebration from Facebook for that. I mean, this company is getting very thirsty for us to celebrate our friendships. So, yes, maybe it's an academic look, but maybe it's also something that Facebook wants to convince us is good for us.
Now, interestingly, Chamath Palihapitiya, longtime former Facebook executive, made some controversial remarks at a conference at Stanford a few weeks ago where he said he feels tremendous guilt about some of the things he's created. Facebook then wrote back, this response, really sort of tearing down Chamath's remarks. He has since written another Facebook post saying, "My comments were meant to start an important conversation, not to criticize one company, particularly one I love. I think it's time for society to discuss how we use the tools offered by social media, what we should expect of them, and most importantly, how we empower younger generations to use them responsibly." David, what's your take on all this?
Well, it's about time that Facebook acknowledged that social media and Facebook itself can have negative effects. It's been kind of amazing the degree to which they've refused to even engage in that discussion up to now. So I think it's a very healthy step in the right direction. They need to take many more steps to engage with an awful lot of concerns that have emerged in society, particularly in the last year, about the degree to which they control the social dialogue and the degree to which people are, in the view of many, addicted to these kinds of services. But it's very positive. And I agree with Chamath. Facebook has problems and challenges. It also still creates tremendous positive benefits for society. And this is what makes it a very hard thing to rationalize and figure out what to do next.
Sarah, do these celebrations of friendship that you're seeing on Facebook, does it make you concerned about, how engagement on the platform is actually faring?
I think the company is always concerned about their growth. I mean, they have more than half the internet connected population in the entire world using Facebook right now. They need to keep increasing those engagement numbers. But one point I'll just make about this overall discussion is we are seeing that companies in Silicon Valley do not know how to talk about their power. Facebook today, with this blog post, is trying to present itself as responsible, caring about its users, still doesn't understand its conversation about its power in society.
Incredible power in society and the world. All right, Sarah Fryer, who covers Facebook for us, thank you so much. David Kirkpatrick, who wrote the book on Facebook, CEO of Techonomy, and our guest host for today. David, thank you so much for joining us. And finally, Thor, a Los Angeles-based startup, wants to beat Tesla to market with electric semi-trucks. The company's custom models are expected to hit the road in 2019 and meant for short hauls. Bloomberg's Ashley Vance spoke with the CEO, Dakota Semler.
Thor is one of a handful of companies trying to bring electric drivetrains to really big vehicles.
Really, we set out to solve the issue that fleets are having right now with diesel vehicles. A lot of that surrounds around compliance, maintenance, the cost of fuel, cost of energy, and so we were trying to set out to solve a lot of those problems that fleets have.
In November, Elon Musk unveiled this sucker at an event in LA. Musk said the Tesla semi-rig will cost $180,000, go 500 miles on a single charge, and recharge in about 30 minutes when it arrives at the end of 2019. I came to visit Thor to see what a real-life electric semi can do today. Thor got started in a warehouse when Dakota bought a diesel truck and hired a team to convert it. They replaced the engine with an electric motor, they built some battery packs, and they slapped a giant screen in the cab.
Tell me about the logo. It looks almost like Tesla meets Transformers kind of thing.
Part of what we're trying to do is really exude kind of the power that EVs can provide. When you think about EVs, particularly when you're talking about commercial vehicles, people are like, they're weak, they're not strong.
So you're Thor's hammer.
Yeah, and it's tough, and it's a brand that people will really come to be known as kind of the tough EV brand.
This prototype truck is called ET1, and Tom here agreed to take me out for a spin with his mustache.
When I first looked at the truck, I thought, well, don't quite know that's going to work.
Electric trucks are going to cost more than diesel rigs, have shorter driving ranges, and require a charging infrastructure to be built. But Tom thinks they have a chance.
The way this thing pulls is really unbelievable for an electric vehicle.
So you were surprised the first time you jumped in? Yeah.
I was shocked, more like.
If nothing else, the truck is good at getting attention.
No, this is a Thor truck. It's electric.
Thor expects this truck to cost $150,000 for 300 miles of range when it goes on sale in 2019. And they're quiet, run clean, and have amazing pickup.
You know, the power in this thing is unbelievable, the way it takes off and the way it handles. It speaks for itself.
Yeah. Thor has 18 employees, including a handful with deep electric vehicle expertise. The startup bills itself as an electric auto lab that will make all kinds of custom vehicles, including things like delivery and garbage trucks. Thor will have a hell of a time going up against giants like Tesla and Daimler, since they have, actual factories and experience. But LA has long been home to high-risk custom auto projects. Tesla's early operations didn't look much different than these.
Bloomberg's Ashley Vance there. And that does it for this Friday edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. Have a wonderful weekend, everybody. We will see you on Monday. This is Bloomberg.